A crucial backstop for much-needed funding. The EU is using emergency powers to indefinitely freeze Russian state assets in Europe, a move aimed at propping up Ukrainian state coffers, which are quickly running out of cash as the Trump administration increasingly takes Moscow's side in the push for a peace deal.
The Americans stopped bankrolling Ukraine. Without the European financial guarantees, Ukraine would not be able to survive financially.
Some 210 billion euros belonging to Russia's central bank are blocked in Europe under EU sanctions, the majority of those funds held by the Belgian financial clearinghouse Euroclear. Europe has been using the interest generated by the money to provide some 50 billion euros in loans to Kyiv, but that interest is declining. The EU now plans to use the entirety of the frozen Russian funds, first to underwrite a 165 billion euro interest-free loan that will fund Ukraine's civilian and military budgets through 2027, and to help repay a previous 45 billion euro loan from the G7. Ukraine would only be required to repay the 165 billion when Russia ends its war and pays reparations to Kyiv. Belgium, the home of Euroclear, has been loath to approve the plan, fearful of legal jeopardy, as Russia, which calls it theft, sues to get its money back.
It is not acceptable to use the money and leave us alone facing the risks.
The indefinite freeze is intended to prevent EU countries that are friendly with the Kremlin, like Hungary and Slovakia, from vetoing the renewal of the asset-blocking sanctions. It's also aimed at preventing the US from trying to return the funds as part of a lopsided peace deal. The European Council is set to meet December 18th to hammer out the final details of the reparations loan, including how to guarantee Belgium that, come what may, it won't find itself on the hook to repay Russia alone.